A very good afternoon to ladies and gentlemen watching the weekly market review. Today is the 21st of July, and as usual, I have with me Gerald. How are you, Gerald?
Hi, Sunny. Hi, everyone. I'm very well. So I think we have seen the markets doing very well over the past week. The S&P 500 and the STI are at record highs. So hope to be able to share some of these updates with all the viewers today.
Yes, recently I have seen you been smiling a lot more. I believe that has the point to do with the all-time high that we are still chasing right now. We are into the early part of the earnings seasons, and so far, I think about 60 companies have reported on the S&P 500 more than 80% beat their expectations. And of course, we have the STI. I think is now a consecutive more than 10 session, more than 2 weeks of positive closing for every single trading session. So exciting times ahead. So I'll give you some time with Gerald to go through some of the developments that happened last week.
Okay, thanks so much, Sunny. I'll try to smile a bit more also. Okay, so in terms of the disclaimers, today's sharing is for information purposes only and should not be taken to be financial advice. If you find the weekly market review helpful, do leave us a review on Google by going to this site. And if you'd like to join SIAS as a member, you can scan this QR code or go to sias.org.sg/membership. And as a SIAS member, you can access various online resources as well as investor education programs. Okay, so like I mentioned earlier, we saw the US and Singapore market reaching record highs. The S&P 500 is now close to the 6,300 mark with a 0.6% gain in the past week. The STI close to the 4,200 mark with a 2.5% gain in the past week. Okay, the key economic data point that came out last week is the US inflation data. So I mentioned in the last weekly market review that this is something I'm keeping a close lookout for. And what we see here is that in terms of the core consumer price index, it was a 2.2% increase compared to the previous month. So that was slightly below the market expectations. And like we see here, this is actually the fifth consecutive month that we are seeing just a 0.1 or 0.2% gain in the consumer price index. Okay, so overall, the inflation in the US now appears muted, despite all the concerns that the tariffs would actually drive up prices in the US. Okay, so with that, we saw a slight dip in the US 10-year government bond yield, but even then, it remains fairly elevated. We have the US 10-year bond yield now at 4.42%, after moving up from a recent low of about 4.25%. Okay, in Singapore, the 10-year government bond yield has moved down. We are now back to below 2.1%. And effectively, we have seen this continuous fall in the Singapore 10-year government bond yield since the start of this year. Okay, and next we come to the Straits Times Index reaching another high. Effectively, since the end of June, the STI has just been moving up. We see this very sharp move up from about 3,900 points to now 4,200 points within the span of a few weeks. Okay, and if I were to compare to the April low of about 3,400 points, that actually represents a fairly sizable gain to now 4,200 points for the STI. So I'm sure Sunny will share more about the technical analysis and help us understand some of the technical indicators for the STI now. Okay, in terms of the top performers, we have Seatrium, Jardine Matheson, and City Developments, each with a gain of close to 10%. And what we see here is that City Developments was a standout performer, and I'll share more about City Developments later. In terms of the worst performers, not many stocks with losses in the past week. We just have CICT and Hong Kong Land. And even then, the losses were not very sharp. Okay, so the name I wanted to share more about is City Developments. We see that after the slight dip in April this year, the share price has bounced and is actually now at a 52-week high of $5.90. Okay, so what I wanted to do is have a quick recap around City Development's fundamentals. A big part of the move in the past week was due to some changes in the board, which led to investors having the view that some of the dispute that may have come through earlier this year may have been resolved. So what I wanted to do is understand the fundamentals of the company and see whether that is something that is also improving as well. Okay, so if I look at the FY24 revenue and profit, they were generally weaker compared to 2023. The revenue came down to about 3.3 billion from 4.9 billion in 2023. And in terms of the profit after tax, it was at 201 million compared to 317 million in 2023. Okay, so if I were to look at the fundamentals in 2024 overall, there has been some weakness in terms of its revenue as well as its profit, and that likely reflects the slower property sales that we saw, especially in the first half of 2024. Okay, so we see here total sales of about 1,500 units in 2024 from the property development in Singapore, total sales value of about 3 billion. And with that, City Developments had a market share of about 20% of the 7,700 units that were sold in Singapore. So overall, I think investors still see City Developments as one of the key proxy to the Singapore property development, given its very sizable market share in the Singapore property market. In total, they launched 4 projects last year with an average sell-through rate of about 70%. And we see here some of the projects like Lumina Grand had a higher percentage sold of about 96%, while Union Square Residences that was launched in November had a lower take-up rate of about 33%. Okay, so that brought the average sell-through rate in 2024 to about 70%. Okay, so this actually shows the pipeline of potential launches in 2025, and I think that is what investors are looking out for to see whether these new launches can help to drive even more positive sentiment towards city developments. So we have one site at Zion Road, and then that is something that investors are keeping a close lookout for. After the launch of the Ori in January this year, that was 89% sold. Okay, outside of the residential projects, what investors also look out to city developments for would be its exposure towards the commercial real estate sector in Singapore as well as overseas. So in Singapore, that would be a contribution from both the office as well as the retail segments. Okay, if I were to look at the Singapore office assets, the committed occupancy is at 97.7%. And if I were to look at the retail portfolio, the occupancy is at 98%. Okay, what City Developments is doing is various asset enhancement initiatives to be able to drive improved performance for some of these commercial assets. And if you are staying in the northeast side of Singapore, you might visit City Square more often, and you realize some of the ongoing asset enhancement initiatives that is happening at City Square Mall, which is targeted to be completed in the first half of 2025, which means that if you visit the mall today, you'll see that most of this AEI has already been completed. Okay, if you were to look at some of the other assets that City Developments has, through its holdings in MNC, it also has a global hospitality portfolio of more than 160 hotels. And what we generally see is that in 2024, there has been an improvement in the room occupancy, average room rate, as well as the revenue per available room across these hospitality assets globally. Okay, at the same time, City Developments is expanding its portfolio in the living sector. And what we see here is that the number of units in Singapore has reached 926 units. And some of this would include some of the service residences as well as co-living spaces. Okay, so for the overseas assets, we see that the portfolio occupancy remains above 90%. And that also includes some of the purpose-built student accommodation, which is one area where many of the listed companies are expanding their portfolio towards. Okay, in terms of the balance sheet of City Developments, net gearing of 69%, and for a property developer, that would be a reasonable gearing level. It has total cash about 2.8 billion. And if I was to look at the interest cover ratio, that is at about 2.1 times. Okay, if I were to look at the NAV per share of City Developments, that's at $10.17, which means that based on its current share price of below $6, the price to book valuation of City Developments remains below 0.6 times. And if I were to look at the RNAV per share, that is actually at $17.57, which is an increase from FY 2023. Okay, so that is in a nutshell some of the recent updates for City Developments. For this week, I'll be keeping a very close lookout for some of the Singapore REITs that will start to report their first half results. We also have the US tech earnings coming through, including Alphabet and Tesla earnings. Okay, so with that, I'll hand over to Sunny, who will share with us the technical analysis.
Okay, thanks, Gerald, for that sharing on a city development. So earlier we were speaking about STI at the all-time high and still going up. Today it has broke above the 4,200 level. The high we've seen today is at 4,225 in early Monday trading. So to take stock of how far STI have come year to date, we are up about more than 11.5% already, compared to the US indices up between 4 to 7 or 7.5%, I would say, between the three major US indices. So the STI is really outperforming some of the global market indices. And over the weekend, I read one of the latest analyst report on what's the projection of the STI index going to the second half of the year, and that report is by Maybank Securities. They said that the index could have a high probability chance of reaching the 4,600 level due to the safe haven effect of STI, as well as some of the trade flows that may flow through our part of the world, this region, because of the US trade tariff. So Singapore market stands to gain a lot from this volatility in the global markets, and hence that are some of the reasons that push the STI up. Okay, so why I need to read those fundamental reports is because at the all-time high of the STI index right now, there are lesser indicators or lesser indications of where possible support and resistance level could be. Okay, so one of the indicators that I commonly use is the Bollinger Band indicator, which measures two standard deviation away from the mean. And that upper bound is now at 4,220, and we have sort of a challenge or touch that level this morning. And we can see that it has been trending on the upper bound of the Bollinger Band very closely in the past 2 weeks or so. And I believe going into the earnings seasons, the bulk of the earnings season with the REITs reporting this week and next week, I believe the STI momentum will continue. But then where could be the resistance level? At the top side, I only have the Bollinger Band right now at 4,220, which is where we are at right now. So I'm not, if you ask me to chase this rally at this point, I'm not comfortable. Other key levels that I'm looking at will be the previous high that we saw in April. That is around the 4,200, 4,020 points level, 4,025 points level. So that previous low has now become, the previous high has now become the new support level for the STI index at 425, with the 20 days moving average, the green line that you see here at 4,048 points. Okay. So looking at the other indicators, MACD is still telling us that, hey, this is a positive trend that we are looking. and that trajectory is still pointing upwards for both the MACD and the signal line, and that positive readings tell us that the rally is likely going to continue further. The RSI, however, has reached the overbought level, so the indicators are contradicting each other, so not giving us any certain confirmation. So I think looking at the STI right now, investors who have been riding this rally, even for the last 2 weeks, we have more than 10 consecutive session of positive winning trading session already. Would want to look at taking some profit off the table. If there's any pullback, definitely it's a good chance to go back in again. And the key support level would be at the 20 days moving average at 4,048 points and the previous high at 4,025 points. Okay, so that's my take on the STI and the latest update from the analyst with the target level of 4,600 from Maybank Securities. So let me move to the US indices. So the Dow Jones Index saw some profit taking last week. So we can see that last Friday is a drop about 0.32% or 142 points. So for the whole trading week, it is sort of a slightly negative. So the all-time high still stands at the 45,073 points level, which was the level that we see in January period this year. So with the earnings season still in the early parts, I believe there is still a chance for the Dow Jones to catch up. So looking at the technical indicators on the Dow Jones Index, which majority components are the major banks that has already reported, and that could be the reason why we see some profit taking, because we have met the expectations. The MACD indicator has turned into a negative reading, at least for the past 3 trading sessions last week. That means that the rally that we see since the end of April could be sort of going into a consolidation mode right now. And we are still supported by the 20 days moving average at 43,983 points, with the upper bound of the Bollinger Band now at 45,417 points. Okay, so key levels, 30 days moving average and 50 days moving average could be what you're looking at. But on the longer term, I prefer the 50 days moving average because it is now coinciding with the 200 days moving average, now around the 42,900 or 700 points level. That would be a very strong level for technical traders to come in and support the index up further towards the end of the year. The RSI has actually peaked in early part of July, okay, above the 70-point mark. And after the earnings season started, that has come down. So that means it is still in a positive, it's still in a territory of 59 points, which shows that it is still has some positive momentum in it. So that means that index is not likely to go and have a deep correction, but definitely if it falls below the 43,000 level mark on the Dow Jones Index, could trigger some of the buy signals on the Dow Jones Index. Next, let us move to the S&P 500 index. So we are also very close to the all-time high. The high now is at 6,382 points. We close at 6,296 points. So about 100 points different there from the high. Sorry, the high is at 6,313 points, with the upper bound of the Bollinger Band at 6,382 points. So we are about close to 20-30 points away, okay, from the all-time high that we saw on Friday. Okay, so there is S&P 500 closed slightly negative on Friday, just half a point down. So there could be some profit taking coming in the near term, but definitely at this elevated level, we need the earnings to be able to sustain into the earnings season. That means continue to meet expectations, which most of the analysts have predicted. So looking at indicators, the S&P 500 MACD indicator is sort of relatively, I would say, flat. Although it has a slight negative reading, that means that prices has already been sort of consolidating in the past 5, 6, or 7 trading session. The RSI has also been sort of a topish in the past 1 week or so, with the reading on now at 69, 1 point just below the 70-point overbought level. So S&P 500, I think, still have maybe a slight headroom upside, because we still have the upper bound of the Bollinger Band at 6,382 points. So 6,400 points, I would say, is the max for the next couple of weeks. And of course, that largely depends on the results that are coming in, especially the Magnificent Seven that are reporting this week to start to with their results above analyst expectation, that could help us to push the 6,400 level. Lastly, let's move to the best performer of the last week among the 3 US indices. That's the NASDAQ Composite, the tech heavy index. Okay, the high that we saw on last Friday was at 20,980 points, 20 points short of the 21,000 handle. We closed around 20,895 points. You can see that we are also tracking very closely the upper bound of the Bollinger Band with the higher upper bound now at 21,136 points. So that is the near-term target that we are looking at for next week while we wait for the Alphabet and Tesla results. Okay, so support level 20 days moving average at 20,372 with the 50 days moving average 19,628 coinciding with the lower bound of the Bollinger Band at 19,609 points. So these are the key levels that you need to watch out for, and if triggers any of those support level, you should keep your heads up to see whether it will be an opportunity to get in. But MACD wise, you can see that it is, I would say, more or less neutral or slightly negative because a lot of upside going into earnings season has been priced in. So it has been going in a horizontal direction. So it might be going to be in a range bound formation on the STI index as suggested by the MACD. And the RSI is now reading at 73, which is in the overbought level again. So that means that there could be some kind of technical pullback. So I would say that with the indices now all at the all-time high, investors have to really be more careful because when market is greedy, you have to be more patient and be more fearful. And let's say if a pullback happen, you have to be brave enough to catch the pullbacks that happen on the major index so that we can continue the ride to the all-time high back towards the end of the year. So key level on the NASDAQ Composite Index 20,300 with the 50 days moving average at the 19,600 level. That is the key level to watch for next week. Okay, and these are the updates that I have. Anything else to add, Gerald?
Yes, like you mentioned, the markets are now at fairly elevated levels with the S&P 500 and the STI at record highs. We are going to the earnings season in Singapore and also more of the US tech stocks that are reporting this week. So those will likely continue to drive the market direction.
Yes, so indeed a very exciting week ahead. Do stay alert and look out for changes and developments in the market as well as the 1st August hard deadline. I'm waiting to see if Donald Trump will push through his tariff threats again, or do we see a delay in the tariff implementation again. So all this development, we look forward to update you every Monday on the weekly market review. So in the meantime, do stay safe and trade safe, and we'll see you next week in the next weekly market review. Goodbye.